Uh, hey traders, let's take a look at what happened today. Now, yesterday we were looking at the market, and we found some support into the lows, and that was supposed to sort of help out overnight, but we were not bullish yet. There were still some things that needed to happen. The bulls had clearly stated right through here, a couple of times before, which were struggling, and there was defense here. We'd seen bulls come into the market and do their best to defend daily probabilities, but we had a real big issue. The bulls on Friday had given up a really great opportunity to drive the market, and this is what kills trends. So going into yesterday's close, we found a little support into the lows, but we were having some problems. We needed to wait to see what could happen. Well, this morning, let's take a look. We had just a flurry of orders, algos really, running the market just straight through the floor. And if we look overnight, we could see when and where the algos started. So we'll mark this out right here. This is really right there is where the algorithm started to hit the market. And I think this is the bearish motivation we talked about. The bears were very motivated to see the major bullish position just totally get toppled over and the bulls do nothing. So we can see these algorithms just start, and they're just very relentless all the way down through the overnight session, push through the lows like there's just nothing there. And then this morning, again, a sweep down. And this is one of those things that I've talked about. I don't like bearish markets. Bears have this tendency to just say, okay, go. And they just go. They just go. There's no real good structure. A majority of the thing that motivates them is because they can. And that really, at the end, is the major driving objective of the bears, that they can. And you can see we finished up right here. We went ahead and hit that expansion bar where all the algorithms started to hit. So that's where we've sort of covered this back up. Now, it's important to know that this is just how bears tend to operate. They operate in this way where that if they see a window, they get motivated, and when they're motivated, they run algorithms, and those algorithms just wreck prices. Bulls don't operate like this. They're slower, they take their time, and they're more structured. So this is one of the reasons I'm not a huge fan of bearish markets, because of this type of activity, right? What we saw tonight. Last night and into this morning. Just this kind of stuff is hard to participate with because of its sudden excitement. There's not any really great and clear signs of when to go and things like that. So this is just by example why I'm not the biggest fan of bearish markets. I'm also not the biggest fan of bearish-minded people, because they think they can time these things out perfectly, and they're very difficult to time because they just go. They just go. Okay, so looking at today, let's take a look at how today's structure worked out. This morning, we had obviously the velocity or the momentum in the index, the New York Stock Exchange, and this is the composite one, the C right there, not the primary, was down, and we got down pretty low. Look at that, about 100, about a little over 100 here, and decay this morning popped up. Moved up. So the first thing the market was looking for was to see what bears were going to do after this. And bears are bad at structure. They just are. So let's take a look at what they did. You could see right here, the bears finished up their volume right there. And there was a little bit of a move down, and taking a look at tension. Clearly, we had tension moving down, but it pushed up. And the question is, where would the bears have their stops? And looking at this, I'd probably just have my stops about here. I'd probably be using the overnight market to figure that out. You know, this move back, that, you know, if you're going to see a move, you wouldn't expect it to. So clearly the market moved up and did some damage. Those bears stops got hit, and there was just not much else going on there. Now take a look at this. Right at those highs, we have a decay retest. You see that yesterday's high, it hit the high, and so we have a second position. So we'll mark out our first, a second position, and this is a decay retest here. And the decay retest, your stops go just right above it. We all know that they're there. And that decay retest ended up working out a little bit better. The issue with it is that there was still opportunity. This position, the velocity could come up and hit. Remember, the rules for a decay retest is there's no more liquidity opportunities, and they have tried. Like, we know they want to participate. I think they tried here. We could see tension moving down. So yes, they want to play. There was still opportunity though, so that's a little bit of trouble for this. So it pushed back down to basically where the bears had initially tried to get in, and we get that triangle that we so commonly see, which is the entry point gets stopped out, returning back to the entry point. It's such a common thing to see happen. And looking at that, that's how this morning set up. It was basically the bears get knocked out to a bearish position, which runs back to that spot. Now, this is where things get good. The market comes down and we start to have this. We get a bullish position here and another one right here. And these positions are really interesting. Take a look at this. We do not have the bulls impacting tension, but you can see they slowed it down, but we're not seeing it curl up. I like to see tension go in the direction. We could definitely see they slowed that down, the acceleration down. We have that move down right there, and they slowed it down right there. So there's a little bit of a footprint there. We could see the bulls having a footprint. Price pops out, slowing down. So we're seeing some interest in this market from the bulls. So we'll mark these out. The bears there, comes back in. The bulls are hitting just a little. And as we move up, you see tension continues down a little and then starts to curl as we get up a little higher. And this goes, it's not closing the gap. This wasn't after the gap. I think this was after this here. The market makers were holding on to unwanted inventory because of the algorithms that were hitting, and that's why it returned there, so that these market makers could dump all of their inventory. And if you're holding a bunch of longs all the way down, dumping your inventory all right here at the same time, that's great. I mean, you're gonna make a bunch of money dumping those positions. So it moved up to let these market makers unwind the position they're holding on to. So this is sort of where we're at with this. We're moving. We have some bears who try to pop in here. Not much. It leans back, gives us another bullish position, and nothing changes. The bears at this point have realized that the market is not doing well. And what happens is this is curling up majorly because this position right here is letting go. So this one is a decay retest, and on a decay retest, the market will just pop right up to where that stop is right above, and it'll give us a sweep. And you can kind of see the little shape right there of when it popped up, hit that, and went sideways. But it's this position here, the one that was based on liquidity, that is causing tension to accelerate up here into the close. And they're accelerating about as they come up and the market makers. So the expect is to have that response back out of that market maker inventory dump. And it was a moment where that the bears got liquidated. So there's, the bears trying to buy, the bulls trying to buy. And when it comes to market maker inventory, it's a little bit different than you would expect, because you'd think that if a market maker dumps their inventory on the market right here, that buying would shoot it up. But market makers don't operate like that. In this instance, when you have the market maker dump their inventory, essentially, they're going to change the balance of the market because of the way that they work, and it bounces off of it. I know that's a little confusing. Maybe we cover it later. We're just about coming up to the close. I just wanted to get to this point so we could talk about what's going to happen tomorrow. So again, I'll mark out these bears, bulls, bears, bulls, and these guys got liquidated. The market maker was able to. Okay, so here's where we are. We have today the bears failing to control the market twice. We see them twice get knocked out of the market. That's what happens. So these bears are struggling to maintain their control, even with the probabilities in their favor. They did not trap out any bulls. These bulls were able to maintain their positioning in the market. I'm going to mark out the lowest one here, and the bears' best position, which I think was here. So this is where I think that they are, and you can see that this position, this one kind of line up. What's going to happen tomorrow is that the bears now have established their control. They got their victory. They got daily tension down. Everything's looking really, really, really great for the bears. But this is the victory lap. And remember, you need to be careful of the victory lap. In markets, whenever you finally achieve that difficult objective, the thing that you needed to confirm your dominance over the market, you have got to be careful of victory laps. Victory laps are the moment, and it's more of a psychology thing. You need to remember that. there's thresholds and limits and levels, but it's when you realize, like today, with the way everything worked out, when you realize that finally everything was achieved, we got there, we're there, we did it, yay, everybody, that this is the moment for the market to take a victory lap, and victory laps look like this. So overall, on a larger, like a daily time frame, this looks to me like a victory lap. The bears did such a great job, they're failing. And I know that's a strange thing to say, but it's something that happens so common in all forms of analysis. When you finally achieve those thresholds that you've been gunning for 2 or 3 days, the market hits them, it rips back against you. And it has a lot to do with the way that markets deal with supply from the retail group. When retail group all pile into a trade, markets are, what happens is you have your retail group, and retail has to submit to the world's true power, which is margin or debt. So the retail all pile in and their trades get margined to death. Just, I mean, when you see all the retailers or it's a class of people come in together, you margin them together and they all get so much margin. What margin does is it puts an inherent negative pressure on your position. You did not inject. So, I mean, if you buy one share at 387, if you put $387 behind that share, you basically support the account balance. But if you only put in $50, you pull the account balance down against you because you didn't put in the amount at the price. So margin drives it down because debt's not real money and the market knows that. So basically you're not putting in enough equity, and so it's going to drive it down. And that driving down of the price works against you, and it works in both directions. So the retail comes in when they see those big thresholds get hit, and it's the victory lap, and you have to be careful of the victory lap. So this is where we are, the victory lap, this pullback, this move back to this margin spot here. The thing that needs to happen tomorrow is that the bears need to pump tension again. You can't just get it down. We need to see them pump it further. And we could keep going. We're only at 29%, so there's only an upside of 29%. They could keep going all the way until there's, in this climate of a market, I could 60%. I'm not sure, 70 maybe. If we had some world event that sort of backed it, we could get a little flurry of just excited people who are just excited because they saw something on CNN. But in this structure, we could see this move down just to like a 60%, a positive 60%. So in other words, push down enough that there's an equal upside of 60% is possible. But because of this pullback up, that the whole move down, this move back down, is going to take work. Just getting back down to this low. And because this low was so aggressive, it was essentially built on margin calls. Hopefully none of you know that because of personal experience. But that's what a margin call low looks like, and the way that they're built is they drive this down till the margins get hit. The margins were essentially sold through here. Anytime you were picking up positions or anywhere in these areas or this area, they're building a margin down here by essentially looking at your account balance. Say you have $5,000 in there and you pick up one share here and then another share here. As soon as your margin gets closest, so your $5,000 move is about 100 points. If you pick up 2 or 3 or 4 contracts, it brings your margin up. And once your margin gets up into the zone where that they can sell it as a product, the market goes, okay, we have enough margins down there, and then they can go pick up their product essentially. So you have to be careful about that situation. But that's what they look like, exactly like this. So this looks to me like it was built off of margins. Getting back down there is going to be difficult because margins get sold to big players. I mean, just ask yourself, how would you go purchase a margin call? How do you do that? Who do you call? You're not connected enough. So the people who pick up those types of orders that are going long in these situations are people that are sort of difficult to pressure. So this could move back down, and what's going to happen is the bears are going to attempt to pump this down. And the way you pump a market tomorrow, we're going to go over this again, pump. You trap the counterparty and you liquidate them. This is how it's done. So tomorrow they're going to need to trap in some bulls and run those bulls out in order to pump the market further. The issue is that when we've seen this for the past week or so is that the bears struggle with structure. They're all just like all of a sudden go. So getting the bears to structure in a structured way, trap in some people, convince them to hold, and then drive the market down is sort of difficult because they're just so much more aggressive than bulls are when it comes to go time. But that's what needs to happen. If they don't, these bears are in an interesting situation. The bears haven't been able to keep daily tension down. So it makes it difficult for a zero test. If this pops up, the zero test, it will be a zero test, but they haven't had supremacy over this daily tension. So popping it back up could motivate the bulls to say, well, we got it back up. And that's going to become a problem. They're not maintaining their control over a bearish market. The bulls were able to keep this up basically 2 days, and you could treat this morning like a zero test. I think it's more effective to think of it as a margin call, but it was up for 2 days and then popped back up, and it functioned like a zero test. They haven't maintained their control over daily tension long enough for me to think that if it pops up, they're going to go gung-ho again and get crazy and just all jump in. I don't think they're going to do that. Now, if they could keep daily tension down for a day or two and then get a zero test, I think that looks a lot better for a zero test that you're going to want to pay attention to. It's actionable. That's my thoughts on this. If we pop this back up and daily tension goes back over zero, it's like the bears were able to drive the market down without really ever getting control of daily tension. And that's just suspicious. It's just suspicious. So we're going to have to wait and see. In a situation like this, this is a high risk situation. If you're trying to hold a position through this area here, you're in a high risk situation because it's potential that the bulls could get motivated, the bears could get motivated. We don't have enough data points at this point. What I do see for sure is that the bulls did pop in right here, and the bulls did act and drive this thing up, and the bulls are interested in driving this up. So there is, I think, more recently, we've seen the bulls doing better, or the bulls winning. So I'm looking at the bulls right now. We see that here. The bears, they did this morning, they did okay, but then they started failing, and they ended up failing twice. So I'm looking at the bulls because the bulls are winning. But just because they're winning doesn't mean the market's going to shoot straight up. We have to do some setup here. We could trap in some bears and things like that. So that's what I'm looking at tomorrow. I'm looking at the bulls. They're going to be motivated to try and get things to happen here. The bears are finishing up their victory lap, but tomorrow's data points are going to give us, are the bears going to just roll over after their whole adventure here that they did really well? I don't know. But this is where the bulls are sitting. And they are active. And I'm not entirely certain that we need a test of this low because of the way I think it's set up. I don't think we need a test of that low. I think potentially testing this one would be frustrating and difficult. But this low here looks to me a little bit more like if we're going to be running, the bulls are going to do well, this will be treated like the origin, not this low back here. But otherwise, bears, remember that their ability to drive the market down is here, and this is the way they act. So you have to be prepared for that. Don't, if you start to see bearish activity in the market and the bears are doing well and the bulls get pushed upside down, be a little bit more concerned. Don't be sitting there thinking about teeth in a market where the bears have control over tension. Teeth is a dangerous thought in this condition. You need an origin position, you need a root or something behind you, and then you can start thinking about teeth. At this point, don't think about teeth until that's established. Think, if the bulls are going to do well, honestly, this position shouldn't get tested. We shouldn't see this come back down, actually. Otherwise, that's pressuring their main position, and that doesn't work. So if the bulls are going to do well, we shouldn't be seeing teeth. So don't think about that until that we get that established tomorrow. If we can get that established tomorrow. And boy, it would be really interesting to see if daily tension could pop up here. We can get the bulls bringing this up higher. That would be intense. But as far as I'm concerned, short term, I am bullish on this. Long term, I'm sideways. The bears have gotten control of tension, but they have not established that by keeping daily tension down in any real meaningful way so far. Sideways long term, bullish short term because the bulls are winning most recently. So that's where I'm at. Let's see. Yeah, John says bulls finally caught the counterparty. Yes, they did. And that's why I'm bullish over the short term. I think there's a good chance this pushes higher tomorrow. Will the bears hit again? I think there's a really good chance they'll try. And really what's going to establish the difference tomorrow is if the bears can try and spin their tires tomorrow. That's the thing. If the bears come in and if they try to do this again, which I think they will, I mean, why wouldn't you? There should be this situation where that it's like they give it a try and we see a little bit of effort and it just doesn't work. It just all falls apart. It's incapable of having that same awesome downside move that they saw before. And because of that, their capital gets injected into the market, gets trapped in, and that's why running algorithms is risky. You run a bunch of algos and you put that capital at risk. And so if we see that kind of thing tomorrow, it's just going to be over for the bears. It's just done because a lot of that institutional capital will get captured. That's why I think we need to wait and see those bears come in and do their very best, and then the bulls trap them. And that's going to say, okay, this origin position is clearly where they're operating from, and then we're going to be able to know what they're up to and how this is positioned. And we've seen this before. We went through it a week or two ago, where we watched an origin position develop. We saw some roots after it, and we learned about teeth, and we walked through how bull markets work. And so if we could just be patient and wait and make sure that we see all the pieces line up, then we can be sure that that's what we're looking at. And we know how to treat a bull market past there, and it should have a lot of opportunity. But you got to see those pieces in place. We got to see the bears screw up, get caught, mistakes, and the bulls take advantage of those mistakes like bulls do. And then we'll be in the situation that we were in before is what I would love to see that, because it provides a whole heck of a lot more opportunity than bear markets, which are unstructured, just a bunch of people running around like crazy people, and then they all just happen to get together and run in the same direction suddenly. And you're like, and what was your signal? Why did you do that at that moment? Why then did you? And they're like, just cause. And that's their reasoning, just cause. And so bears have this tendency to just be random static until suddenly they're all together. And so if you're looking at the random static to try and figure out what brought the bears together, the answer is there isn't. Maybe they had something a while ago and then they just their feet, and they can drag their feet for days, and then finally they come together and tank the market because they just happen to sync up at the right moment. And as far as I know, that's the way that bears tend to operate on a larger scale. They don't get together and look for a signal. They don't get together and say, okay, guys, let's do this and let's do that. And it's just sort of noise until suddenly it's a clear, crisp signal and they're all moving together. So you sort of have to understand the bears as a collective, not as an individual signal. And as far as I know, their motivation is just there's a window. Like the bulls made a little bit of a mistake, and so at some point, probably they'll go for it, potentially. And to me, that's irritating. It's just a very irritating way to live, and I don't like it. I don't like the way that they operate. It's just very frustrating. But the bulls, I mean, you could see the bulls, I think, is pretty clear. The bears failed here. The bears came in and tried to push this down with a risk reduction position. The bulls popped in nice and, maybe that was a little tough right there, but there's the bullish position, and they went out of the bullish position. Let me ask you, why did the bears decide to sell here? Because why didn't they start selling out of the high? Why didn't they do it intraday when it was easier to get liquidity? Why do their timing is always just weird and difficult to predict. And that's why I don't like them. The bulls, I think you can spot this long right here, dip down. I can identify why they did it. I also know why they went long is because the bears were struggling. I can see who they trapped right here. I could see a secondary position right there. I can see them moving. I can see the liquid. It's like so much structure here with the bulls. It's like, yes, finally, the people who have structure. Bears are just all over the place. They're just all over the place. So, I mean, if you're bearish and you're good at it, awesome. Let me know your secrets, because I mean, I understand why the bears decided to drive this down, but their timing and their mechanisms and stuff is just craziness to me. It's just all over the place. I don't think it's effective for the long term either. Anyway, those are my thoughts. Short-term bullish, long-term sideways until somebody can establish their actual dominance over a day or two with tension, which has been back and forth here. So, all right, I'll see you guys tomorrow.